In this video, I'm going to be teaching my friend Jay how to trade options in the stock market. Grab your phone. You just funded your account with $500 and you're going to swipe up to send that order through. Are you ready? And your fate has been locked in. There we go. We're filled. So we'll see what happens at the end of this video. We'll come back and we'll check on your position to see if you've made money or if you've lost your entire $500. To start off, we're going to simulate the experience of any beginner, which is essentially coming in, creating a Robinhood account, depositing $500, and gambling on some random option contracts. But first, Jay, how much experience do you have trading yourself?
I have absolutely none. Never really focused on it, paid attention to it. So I'm excited to learn.
I hope you are. So we'll see what happens. Let's have you grab your phone. I know you don't even know what options are. You don't even know what a candlestick is or anything, but
Nope.
We'll go over all that. But first, I want you to choose a random stock. Do you have any stock in mind? And I want you to essentially buy an option contract. And then at the end of the video, we're going to see if you make or lose money to show everyone essentially what not to do.
I do not have
Any
a
stock in mind?
No.
Zero?
Zero.
What
None.
about, think of a big car company.
Porsche?
I don't think Porsche trades publicly. How about another big car company that's electric?
Tesla?
Wonderful. So let's search TSLA. Tesla is a very big company that everyone knows about, that is publicly traded, that also I know has what are called option contracts. And we'll get into the details, but first let's click on Tesla. And what you're going to see here, because you did get approved to trade options, if you click on trade and you click trade options. Now, you don't know what these mean, right? We've got some dates up top, May 3rd, May 10th, May 17th. Let's just click on one, just choose, okay? You can see we're buying a call or we're buying, if you click on put, we're buying a put. Do you know what a call or a put means?
No.
So,
I had no clue.
A call, you're betting on the direction of a stock to go up, and a put, you're betting on the direction of a stock to go down. Now, options are leveraged essentially 100 to 1. So you're going to be able to see a lot of gains with a very small amount of capital, and that's why a lot of people start out in options. However, because of this leverage, it is a lot riskier. So you'll learn how to essentially counter that risk. But right now, knowing nothing, I want you to choose, well, whether you'd like to buy a call, right, betting on the direction of Tesla, in this case, to go up, or buy a put, betting on the direction of Tesla to go down. And then I'll let you randomly choose what is called the strike price of the contract. So you can see the prices here. We've got the 197.50 put, or we've got the 190 put. And so I'm just going to let you choose which contract you want to buy. And you've got $500. So let's see, it's up to you whether you want to put your whole account. And we've got about an hour until the market closes. So you want to go with May 3rd?
Yeah, we'll go with May 3rd.
Okay. And I haven't explained anything, so I'm just literally, I want you to do what most people would do.
See, I don't know.
Are you nervous?
Yes.
Yes, because you don't want to lose your 500.
I don't.
So, okay, listen, I'll give you a little guidance here. There's what is called in the money and out of the money. So let's say we want to buy a call. We're going to go down here. You can go to the share price. You can see the share price currently is $191.35 for one share of Tesla. Now, in the money is going to be anything below the current share price. Okay, so like the 190 calls or the 185 calls, those are in the money. And the out of the money are going to be anything above the share price. Okay, so the 195 calls are out of the money. And then with puts, it's just going to be the reverse. So anything above the share price is going to be in the money, and anything, below the share price is going to be out of the money. Because essentially, in this case, what we'd be saying is if we want to buy these Tesla calls, and Tesla's currently trading at 191.33, well, what we're essentially saying is that by May 3rd, I think that Tesla is going to be at or above $190. Now, obviously, Tesla is already at or above, right, $190. So there's more value in these contracts, right? Whereas on the other hand, if we're like saying, hey, by May 3rd, I think Tesla's going to be at $200, these contracts have less value. You can see they're actually cheaper. So these are $320 or $330 a contract, whereas like these 185 calls are, $1020 a contract. And so there's more intrinsic value in the money contracts. They hold more value. We're already there, but when you're betting on a contract that's out of the money, there's what's called extrinsic value. So there's less value behind those contracts because you're betting on the price being there at that time. It's not there yet. So you can make more money on the out of the money contracts, okay? But they're also riskier. You can lose more. So inherently in the money is safer, okay? And out of the money is riskier. And when it comes to options, see how it says like 505?
Yeah.
Well, because option contracts are leveraged 100 to 1, that just means $510. So that is a $510 contract instead of, well, it's not $5, right? It's 500. So I'm going to let you just pick one, and you're just going to click on it. Just click the plus, and then I'll show you how to buy it. You're going to go with that one?
I think so, yeah.
Okay, so $505 a contract. That means you can click on one, right? We can just buy one contract, and you're going to click on review, okay? And you're going to swipe up to send that order through. Are you ready? And your fate has been locked in. Let's see if you get filled. Okay, you'll see based off the contracts, right? Based off the stock you're trading, some people are trading more contracts than others, and it really just depends. Like Tesla's a very well-known stock. A lot of people trade Tesla. So you'll see here, right now you're sitting in like an order book. Your order is waiting to be filled, okay, by a seller because it's a marketplace. So you can see here, we still haven't gotten filled, and this can happen, especially more on Robinhood. There's really slow fills on Robinhood. If you go to replace order, we might have to change up our order fill a bit because we're trying to get filled here at $5 a contract, right? That's $500. But you can see here, there's what is called the bid and the ask. So the bid is at 510 and the ask is at 515. We want to be somewhere in between 510 and 515. Okay, that's like the spread. The spread is between 505 and right now 515. And it's moving because the market's open and Tesla is pretty volatile. So if we want to click replace order, and let's see if we can get filled at 505 instead of $5 or $500 a contract. So you can see here, we've got our bid, we've got our ask. Let's see if we could get filled on the lowest end of the bid instead. Let's pay the least possible for these contracts. So we're saying, hey, we're putting our order out there. I want to buy one contract at 505, and then we'll let someone else either sell that contract to us or not at that price that we want. Make sense?
Yeah.
I know I'm throwing a lot at you right now, but we're covering some more in-depth stuff too that I haven't even covered in the past with like other friends I've taught how to trade. So let's click on 505, 5.05, and we're going to go review. And let's see, swipe up. Let's see if we can hit the low end of the bid. Okay. And again, you can see the bid is moving 505, 515. There's this idea, and when it comes to trading, based off of the amount of capital you have to trade with, based off of the specific stock you're trading, really sometimes you won't be able to get filled, but sometimes it'll be super easy. And sometimes you'll have to pay more. Sometimes you might get a better price. If you're really confident in the position and you want to get in the position, we're just going to have to hit the ask, which means we're just going to pay the highest amount that we're essentially going to be paying a little more than we might want to get in this position, but we will be guaranteed a fill virtually. We're still sending in a limit order, but we can send in a market order. So a limit order is where you get to decide at which price you want to be filled. And a market order is, you're just saying, hey, I'll get filled at whatever price. Does that make sense? So because we're not getting filled, we're going to go,
Oh, we just did.
we got filled. Okay. And if you could sit there, you could wait for your order to get filled. There we go. We're filled. So we'll see what happens. Now, if we hadn't have gotten filled, you could have, just gone in with a market order and you essentially would have gotten filled right away. But now we'll have to see at the end of this video. We'll come back and we'll check on your position to see if you've made money or if you've lost your entire $500. You nervous?
Making me really nervous, yeah.
All right. That's exciting, but, I want to show you the correct way. Really, I want to give you the right education. And so we're going to hop on inside my computer. I'm going to teach you how to trade options, not just gamble options like you just did, like most people, come into the market and actually do themselves. Okay? Sound good?
Sounds good.
All right, let's go. All right. So do you have any questions so far?
I got a lot of questions. Like, what is this even blue line? Like, what are all these lines? What are the colors?
Okay, we'll cover everything on my screen. I know it's kind of overwhelming, and I know we kind of ran through everything pretty fast, but I do want to set you up with the masterclass I have. I'll let you run through all of this on your own time at your own pace, and I go into everything we just covered and what we're about to cover in much more depth. This is kind of like a 30,000 foot view of everything, and then I'll set you up. I'll get you in the mentorship group. You'll be able to take the class and you'll be able to learn all this on your own. Fair?
Yeah.
And you'll be able to just, I know, digest all of this information, in time, because this is a lot. There's a lot here, like you just said, but the main thing I want you to look at, and just realize now we're looking at a chart. Before we were just looking at some option contracts, and on Robinhood, there's no charting. What this is called is technical analysis. Okay. So I am doing all of my trading based off of charts and order flow. So I'm not looking at a company. I'm not looking at how well is the company doing. I'm simply looking at these candlesticks, and then behind those candlesticks, something we might get into in later videos, the actual order flow. Okay. Like I said, this is a marketplace. So I like looking at buyers and sellers and the interaction between. Right now, you can see we've got these red and green, what are called candlesticks. Now, each one of these candlesticks represents a time frame. So right now we're looking at a 4-hour time frame. Each candle represents 4 hours, and we can see the last 180 days worth of data. Okay. Jeez. So that's the 4-hour 180 day. That is the time frame that I do all of my trading on when it comes to the swing trading that I do. Most of the trading that I'm doing is on a swing basis. Swing just means that whatever I buy today, I'm not selling today. I'm actually holding into either, tomorrow and selling, or holding over the course of 3 to 5, even a couple weeks.
Okay.
So day trading is when you're buying and selling whatever it is, an option contract, a stock within the same day. Makes sense?
Yeah.
Swing trading is when you're holding that position over a couple of days. So I want to teach you in this video a simple swing trading strategy that you should be able to apply at the end of this video using the 4-hour time frame, right? Each candle representing 4 hours, and using a series of what are called moving averages. A moving average, well, you can see here, we've got 3. We've got these lines. You're asking what all these colors are. Well, each one of these lines, right, with its respected color represents the average movement of this stock, which we're looking at right now, Netflix, over a specified period of time. So we're looking at right now 3 moving averages. I don't want to get into too much depth, but just know that these moving averages are going to be what we are going to use as what I like to call, or say, reference points. These are going to be our reference points when we're looking at this chart. And we can look at these candles, these 4-hour candles, and we can look at, well, in correlation to where these candles are, where are these moving averages? And based off of that, we're able to make some educated decisions on what direction we want to play that stock.
Okay.
Now with options, like you learned, we can bet on that stock going up or down based off of whether that is a call or put. And so we're looking here at first the 180-day SMA. That is that green line right there. Okay. The average movement on Netflix over the last 180 days is represented by this green line. Secondly, the 50-day SMA, okay, this red line, okay, average movement over the last 50 days, and then the 15-day EMA. EMA stands for exponential moving average. It's a different moving average than the 50-day and 180-day, because these are SMAs. They're simple moving averages. And this is the 15-day EMA, exponential moving average, okay?
Yep.
Now, I want to talk about support and resistance, because these moving averages aren't only going to give us reference points. Well, reference points that we're going to identify on a chart are going to be in the form of support or resistance levels, which is what we'll do a lot of our trading around. Right now, like I said, I'm mainly a swing trader, right? I'm buying these option contracts and I'm holding them over 3 to 5 days. That's like my average hold period is about a week that I'll be holding these positions. So I'm not in and out many times a day. And that's great because I'm only spending 30 minutes a day right now trading. I've actually boiled down what would have taken hours and in a very systematic approach figured out how to spend the least amount of time possible on the market and get the most output possible. You know, for you, you're busy, you're working, and that's why swing trading might be a better way for you to capitalize on making money trading, because day trading requires a lot of time. It's very time intensive to trade at the level you have to make money day trading, simply because you have to be on your computer monitoring positions, you know, for 4 to 5 hours a day. You have to be looking at your screen, and that is just not realistic for most people. That's why I often recommend swing trading as the best approach when you're starting out, or just in general. So when it comes to support and resistance, you know what support means?
No.
Support is like, think of like something falling. If you want to hold something up, that's like your support, right? So if you're looking at like a candlestick and the candlestick is falling, well, wherever it stops falling, right? See like this little, what is called wick, that's the end of the candle. So this is the body of a candle. This is 4 hours, right? This is the wick. You can see how the wick stopped there. It found support. It stopped falling, it found support, and it actually moved up. That is support. Now, on the other hand, resistance is the opposite. Resistance is a ceiling. So if a candle is pushing, let's find a very defined area of resistance. Let's say this high here at 640.26. Now it says high because when we're looking over the last 180 days, this is the highest price at which Netflix has been trading. This is our resistance. You can see here the wick peaked at 640.26. And then if you look at this same wick within this 4 hour time frame, our low, okay, our low on this candle was 565.54. That you could say is our support or daily support, because each black bar here, you can see this is black and then this is shaded gray. This is when the market is open. So this is open active market hours, and this is after market. And then this red line here, well, after this red line, that is going to signify the start of pre-market. So aftermarket, pre-market, and then the market is open. So our daily, this is within 1 day we're looking at right now, okay? This is our resistance, and we can go ahead, go over to drawings, drawing tools, and we can click on price level, and this would be our daily resistance and our daily support. I want you to just realize and keep in mind that this little blue icon down here, that means that this stock had an earnings call. So that's when the company comes out and they essentially say how they did within that quarter, what their revenue looked like. And so based off of that, the stock is going to react. It's either going to go up or down. And often this is like a very volatile movement. And you can see we had this very large wick. We saw, if I go to drawings and then I go to trend line, if I chart from the bottom, our support, to the top, our resistance, we saw about a 13% move in price within this 4 hour period of time. That volatility, okay, being due to that earnings call. Now, support and resistance we can see on any time frame. We could see it on a 1 minute time frame where each candle represents 1 minute. We can see it on a daily time frame where each candle represents a day. And the larger the time frame where you can identify those support and resistance levels, well, if it's on a larger time frame, that is going to be what I like to say, just a stronger support or resistance area. So on a daily time frame, we have a very strong area or level of support around 542 here on Netflix, right? You can see the wicks came down. This one daily wick came down here. And the more tests of a support or a resistance area, well, that is going to further confirm or validate that that level is going to hold if price pulls back to that support or pushes to that resistance. And I'll give you examples of that, but you can see here our high at $639. If we want to go on the daily time frame, we can see here all of our price movement, and you can see this is all the way back until looks like 6/1/2023. Okay, we can look at any period of time we want, but like I said, we're going to stick with the 4 hour, and we are going to now take what we just learned, knowing what a support area or level is and what a resistance area or level is, and we want to apply that same concept, but apply that concept with moving averages. Okay, so when we look at these moving averages, we can see here the 180-day SMA. If we just look back, okay, well, this is over the last 6+ months, right?
So it really did drop a lot.
Yeah, we can see here the 180 day, look, it was acting as a support area. We could see price pull back and then bounce off, pull back, bounce off, pull back, bounce off. But recently
It really shot up.
it spent, yeah, so Netflix has been very bullish. Okay, bullish just means, well, if we look at a chart, if the stock is essentially going from the bottom left to the top right, that's bullish. And if it's going from the top left to the bottom right, that's bearish. So if it's going up, that's bullish, bearish is down. Like you just said, really Netflix has pulled back a lot. And that was, you could see earnings recently. Netflix did have earnings, and that did cause this, I would say, interruption in trend. If we look at the trend, we can see the trend was very bullish. That 180 day was acting as a support level. We had many tests of this level. I threw a lot at you. You have any questions? I know we're kind of running through it fast, but I want to give you an opportunity in a bit to go through a couple charts and identify support and resistance areas yourself. But how are we feeling so far?
I'm feeling better now. I'm starting to understand, like, yeah, what the lines are meaning. I'm now following, yeah, it is going up, but now it is also coming back. It's the 4 hour span. I am picking it up a lot more, but yeah, it's a lot. It is a lot.
I get it. That's understandable. Well, hopefully we could give you a little more confidence by the end of this video. And like I said, I want to get you to the point where you can identify support and resistance yourself and then kind of apply that, take that theory, looking at these moving averages, look for in any chart what I call a setup, okay? We'll get to that in a bit. I like saying this as kind of like just a general rule of thumb. You should know that the 180 day out of these 3 moving averages, because we are taking into account the most data, this is going to be the strongest either support or resistance area. Now, if the candles are trading below the 180 day, that means that it is going to be acting as a resistance level. So you can see now candles are trading below the 180 day. The 180 day is going to be resistance, whereas before candles were trading above the 180 day, which means the 180 day was acting as support. Now, followed by the 180 day, we've got the 50 day. This is going to be a little weaker, right? Either support or resistance level based off of where candles are trading compared to the 180 day. And then next, we've got the 15-day EMA, which is going to be really the weakest. It will be the weakest moving average out of these 3. So I'm going to have you go through a couple of charts. I'm just going to go to the S&P 500. What I want you to do, I think this will be a good place to start, is just look at the chart. I want you to first identify the trend, okay, whether the trend is bullish or bearish. And then I want you to tell me whether the 180-day SMA is what I like to call respected or not. And when I say respected, you'll see that some charts are just very choppy. They're not clean. There's no clear trend, no clear direction. And maybe it's hard to tell whether they're bullish or bearish. And I'll give you some examples of what I mean when I say like unclear. But what we want to see is a chart where, you know, the direction is very clear, the trend is very clear, either from, you know, the bottom left to the top right of my screen, very bullish or very bearish. And we want to see if candles have been respecting the 180-day SMA as support. Now, for example, here, see how we're kind of trading on top of the 180-day SMA? Yeah. Maybe it was respected in the past or not, but now it's really not. If we find a chart where these moving averages, especially the 180 day, knowing it's the strongest, is not respected, well, then we don't want to go about making any decisions, right, based off of a level that really just the chart doesn't care about at the end of the day. So I want to have you go through, identify the trend, whether it's bullish or bearish, and if the 180 day SMA is respected or not. Does that make sense?
I know the bullish part, but what was the other part?
Bearish. So bearish, I'll give you an example here. So if we just go to any random stock here, and this is just the watch list that I'm looking at right now with inside of TOS. This is, like I said, Robinhood is not the best option because there's not even any charts. So if you use Robinhood, you can use it for filling your orders, for actually buying contracts. But when it comes to charting, because we're using technical analysis to, at the end of the day, identify, well, what stock do we want to trade and what direction do we want to bet on that stock going, we need some sort of charting platform. Now, it's better to have a charting platform and broker in one, which is this Thinkorswim platform that I use. I'm not like sponsored or endorsed by them. I've just been using them for a long time, and they're great. So I can place my orders on here, and I can also look at the actual chart. So a bearish trend is going to be, again, like I said, maybe here is an example. We just see movement overall to the downside.
Yeah,
Okay, from the
this one,
top left.
it's really up and down, but it's mostly staying down. But
Yeah.
it's now starting to, it looks like, come up a little bit.
Okay, so that's good. So overall, the trend does seem pretty bearish, right? We can see the moving averages are all kind of pointing down. We're working our way to the bottom right of this screen, but maybe we're seeing a little what would be called reversal here. And that is a reversal just means when price is like reversing, right? Either going from bullish to bearish or bearish to bullish. Make sense?
Yeah.
So you can just click through here
I don't think this is one that we're going to want to take.
because it's kind of choppy, no
It's
clear
very-
direction.
Yeah, it was up here, it was decent. It was up and down. But then as it's now up at its peak at the top, it's now really starting to go down. So this is one that we're not going to want to.
Yeah, it's a little choppy. I would say none of the moving averages, we don't just have to look at the 180 day, but none of them, we want to preferably see all of the moving averages, or really on the 4 hour, we want to see the 180 day and the 50 day, if not, and the 15 day all respected. And it looks like, if we zoom in here and we look at the more immediate trend, maybe the 50 day was respected a little bit, but now we broke it.
Yeah.
The 15 day EMA we're pretty much just trading on, and the 180 day SMA is not respected. And now I have what I call setups that, we're going to look at a chart and we're going to see that most of the time the setups are going to have to do with either the 180 day or the 50 day SMA. Rarely is a setup going to actually have to do with the 15 day EMA. There's one setup that does take into account the 15-day EMA, and I have checklists for what we want to look for exactly, but again, let's stick to the basics. So here's how we can also look at a chart and decide whether it's bullish or bearish. We want to look to see whether there are higher highs being made or, well, lower lows being made. So in this case, if we look, we could see, well, we got a high here at 202.75. Yes, this was a lower high compared to this previous high, but recently we did form this high at 205.33. We had a large pullback. I would say this chart is very choppy, but now we are pushing again. I would say this chart leans toward being bullish overall, right?
Yeah.
But none of the moving averages are respected.
Yeah.
So I wouldn't look to trade that chart. There's too much uncertainty, and that's how I would put it. And
Oh, I see what you're saying.
the direction's
yeah.
not really clear.
Yeah,
Makes sense? Let's look
Yeah.
at another one. All right, so
definitely not.
looks like we saw a reversal maybe off of that low. We were bearish, and now it's kind of turning around in the immediate term, more bullish. Let's keep going. Choppy. And so you'll see, I mean, you might spend an hour going through,
Yeah.
several watch lists. Now we're going through the S&P 500. Okay. Those are the 500 largest stocks in the stock market by market cap. So when it comes to trading options, a lot of the stocks I'm going to trade are going to be in the S&P 500. Just kind of as like a side note. But yeah, I don't like that one either. And based off where the overall market is, like however the market is trading, that is going to be well reflected on what we see within these individual stocks. So if all these individual stocks we're looking at are very choppy, more than likely the overall market has been too. Make sense?
Yeah.
So let's keep going here. All right, you can
This one's
remove these.
good.
Yeah, I like this one more, right?
Yeah, this one was really, it was choppy down at the bottom.
Yeah, that was back in August.
So August didn't look too well, but I mean, over time, it's really now, I mean, it's way up there now.
So pretty clean and clear trend.
Yeah.
And what would we say, bullish, bearish?
Wouldn't this one be bullish?
Yeah. Bullish.
Yeah.
Yep. And then as far as the 180 day being respected, what do we think? You can zoom in if you want to.
It has started to go down a tiny bit.
But it looks like we did slightly retrace below and then remounted,
Yup.
and we've continued the trend of higher highs.
So this one
I would say
is respected. Yeah.
I agree. So that's great. We found one chart. Let's zoom out here. Something that you're going to learn later on, and I think we might need to squeeze a part 2 out of this because we've covered a lot today and I don't want to overwhelm you too much. And like I said, I will get you inside my mentorship group. You'll have access to learn all of these setups, and I'm essentially going to equip you with a couple other tools that I built custom to myself and the way I trade, and I'll give you access to see all the trades I do take myself. So whenever I'm entering a position, this is something I do just kind of as a side note. If I'm entering a position, I will post that trade to all the students in my group, and they kind of have the ability, if they want, to copy myself. And then when I get out, whether that's for a win or a loss, I'm posting that exit. So while I do want you to learn the lifelong skill of trading, I don't want to put too much emphasis on just like copying myself. I will give you the opportunity as you learn to begin, watching what I do, shadowing myself in that sense. And if I'm doing well, you'll be able to kind of mimic that result or those results that I'm having. Looking at this chart, we've identified this very clean, clear trend, bullish trend, 180-day SMA being respected. We can see because we know it's respected because it has been acting as this support level. We've seen tests, and yes, we did slightly break below, okay? But we did remount, and now it looks like we're continuing our way back up to that high at 78.95. Now, based off of this trend, how would you look to play this stock, AIG? Would you want to bet on it going up or down?
I would want to bet on it going up. Near the end, it is starting to come back up. It doesn't mean it's going to keep going up. It could go back down, but it looks like to me, from what I've learned today, that it is starting to go back up.
I like that. So we want to play the direction of the trend, and where would we be right and where would we be wrong?
That part I don't know.
Okay, well, let's think about it. I would say I would be wrong if we broke below the 180-day SMA. If we broke below and started selling off, okay? And we can look here and we can say, hey, if we drag down, we can see how much we did pull back below. Oh, well, we pulled it back 1.7%.
Okay, yeah.
Okay, and that was the first pullback we had in months. So maybe we'll set our stop loss slightly below. We could just draw a line here, slightly below the 180-day SMA. Just generally, we can go into specifics, and I actually have a tool I built so you know exactly where to set that. And then, hey, maybe we want to play the move back up to that all-time high at 78.95. So our trade plan, okay, would be, well, hey, we want to play this trend, continue riding this momentum back up into a new high at 78.95, but we're wrong if we break below the 180-day SMA, knowing that there's a lot of history behind, this moving average holding. And so I would feel pretty confident about this trade. What do you think?
From what I've learned, I'm pretty confident with it too now.
And we can see what is our margin for profit. Well, we can drag from where we're currently trading here up to that all-time high. We can see we've got about a 4% margin for profit, and our downside is about 3%. Okay, so that'll give us a sense. Well, we'll be risking less. Actually, in this case, when it comes to risk to reward, that's something we'll get into later on with risk management. But this looks like a good trade. Okay, now the market's about to close. Let's hop on your phone real quick and let's see if you ended up making or losing money. We've got 1 minute. All right, let's see. Let's go. You made 60 bucks, dude.
Oh, dang. I did not expect that.
So scroll down. Let's click here. The market's about to close. Click on trade. Click on sell. I'm going to help you here. We want to go here, ask. Good. Let's send this through. One. All right, what do you think? Your account is now sitting at $626. You locked in 10% returns in like what, 45 minutes to make 10%?
Yeah, I honestly did not expect to even make anything, even just going into this and not knowing anything. Like, I know a little bit now, but I still did not expect to make anything.
That's awesome. That's a great first trade. Maybe a little beginner's luck because that was kind of just, well, wouldn't you say at this point now, knowing what you were gambling? I mean, you didn't even look at a chart.
Yeah, I just went, it was really just go in and just buy. There wasn't really any information or anything. I'm glad I took that gamble though, but knowing the information now, I'm definitely going to be looking at the charts more and seeing what to really go in on.
Yeah. I think that's a good idea. Maybe a little beginner's luck, like I said, but 60 bucks in 45 minutes or 10%. Some people like shoot for 7% returns on their portfolio in a year, and you just made 10% on your portfolio in like 45 minutes. So that's the power of options trading. And in part 2, I want to cover a couple setups. So you can really come in with a defined plan. You can look at a chart, and I'll give you a checklist of exactly what you're looking for. If you guys want to learn how to trade, I'll put a link in the description below for my mentorship group. Like I said, I'll give you access after this. It's like my entire trading system, everything I've learned over the last 7 years. So you can learn this lifelong skill of trading because it is incredible. The freedom that comes with trading is like no other. And being able to see these returns, even with a small account in a couple of minutes, is thanks to options trading, which I will teach you all. Subscribe for more and stay tuned for part 2. Yeah.
57,
Can't get over it.
97 bucks.
He's speechless. All right, thanks for watching. Bye.